All right. And we are hot. And very weird opening today because I know last night, if we actually look at futures, last night we gapped down really hard. We were down almost 30. I think we were down like 39 handles. And I had my hand on the trigger too. Like I wanted to go long, and I don't know. I was like, kind of just was like, you know what? I don't want to get caught in a pre-market, fury thing like last night. It didn't feel right either. Like, I mean, the fact that we gapped down so much. And yeah, and then we rallied. I woke up this morning. I'm like, oh wow, we're up. We were up 10 handles. I think we got up to, we got almost to. Did we get to 60? We didn't quite break 60. 59.60. We didn't quite break that, which is really interesting because we have and I'll just bring this in. We have the S2, R2 at 59.60.75. And again, I thought that was interesting because I was eyeing that on the open last night, looking at R2. I mean, just if you haven't really figured out, so like usually with these pivots, the ones that I usually key on intraday are R2 and S1 and R2. And the reason is because those moves tend to be within the intraday. If we breach an R2 or an S2, chances are we're actually like extending the range quite a bit. And short term, they're usually areas that are prone for, reversals. Now, whether or not it's a sustained reversal, you don't know. But for the way I trade the ES, that's, they set up the best. So anyway, there's that. So this R2 today is going to be, in my opinion, a really interesting spot. And it all hinges on, I'm looking at the eco calendar today, and we have the payroll data coming out. And I think a lot of things are going to be hinged on that. So, as far as the other stuff that's going on today, like the Michigan 5-year, I don't even know, I don't even know if anybody even really pays attention to this stuff. I mean, I think it's more, I think this stuff is like more the wonkos. And I think more importantly, what I'll actually be watching, which is on the radar today, is the WASDE report. And if anybody doesn't know what the WASDE report is, that's all things grains. Right? So that would be, let me add this. That would be soybeans, wheat, corn. To a lesser extent, I think I think cotton is in there, but it's not really a very big part of that report. For the most part, it's grains. It's soybeans, corn, and wheat. And why is that an important report? Well, it's an important one here because here we are in January getting the WASDE report, and these things are usually a couple of months behind. Like they're like a month or two behind. And so what this is actually going to report on is a lot of those late year, like December, November type of yields and whatnot, like what they got, and then forecasts for where we're expected to go from here for the rest of the year. You know, again, it's not that intuitive of a report. It literally is like maybe, I mean, for the most part, it's maybe about, I don't know. When I've used to read them, I don't bother anymore, but they're about 15 or 20 pages. It's a PDF. You can just Google WASDE, WASDE, if you're that interested. It's a cool read. Truthfully, it kind of really clues you in on those markets. And so I'm not going to discount it. But, you know, again, the fact that it's coming out on a Friday after a day we were closed, I think makes it a little bit more interesting of a day. And you won't really see much movement in equities from it, but you are going to see you could likely see some movement in the likes of soybeans, which have been on a tear of late. They have been on a tear. But overall, if you look back, they have been just stuck. These things have just been stuck. And then overall, again, I don't want to get into the grain markets as a whole because it bores the living hell out of most people, these markets. But this market as a whole, and I look at soybeans as kind of the Dow Jones, or so to speak, of the grain markets. That's just how I look at it. But we kind of have this going on here in the grain market. So you kind of have this descending type of wedge, whatever you want to call it. But it's been stuck for the most part. It has not really moved much at all outside of the October move. It's been like, you know, we've had a couple of breaths of, and I think it's like that across the board in the grains. Actually, the corn looks like that one's been the best performer. I just have to be honest, I have not really looked at the grains. I used to trade them all the time and be clued in and have a pretty good pulse of what was going on with them. They've just been dead, and I just actually ignored them. And now that I'm looking at them now, I'm kind of glad that I did because, again, here's wheat, and this thing has gone no place. Literally since July, it's sideways. The only one that looks like it actually has any real upward trajectory is corn. And that's kind of unusual because usually corn sucks too. Usually corn's the worst mover out of all of them. So anyway, again, it just shows that I have not looked at any of these markets in a long time. Probably all last year, I hardly looked at them at all. Because there's no there, then I don't really bother. So anyway, that's coming out. So that's enough of that business. There was a couple of news stories too that I had noticed. Let me just pull that up. Where is that? I saw something about, and I have a little bit. I seen what was it? Is it WBA? Yeah, WBA, which is Walgreens Boots. Had earnings. There was a couple of earnings this morning. I think Delta as well is going to have earnings today too. What am I doing? Let's see. Charts. Still, this Ivy percentile chart is just not working on some symbols. I don't know what's going on with it. Anyway, yeah. So they had earnings last night. or excuse me, this morning, last night. I'll be all right. I had to finish my coffee. Where is the news? News. Yeah, profit estimates as turnaround efforts take hold. So, up a little bit. There's good volatility in here, though. The problem with it, I mean, at 62.5, that's pretty good. The problem is at a $10 stock, there's not really a hell of a lot that you can do for trading wise. You basically can do one of two things with this one. And if I was going to do anything in here, I would probably go out as far as April. I probably wouldn't even mess around with February's, because I don't really think you're going to get much juice. The other thing you have to realize too with this, this Walgreens deal has a lot of headline risk around it, and I know there were takeover rumors with it that they were going to get bought out or they were going to go private, and then I think now they're in like a turnaround type of thing, and so there was a lot of make the story short without me just rambling on. There's been a lot of shit circulating around with this company as a whole. And then given the fact that it's $10, there's not a hell of a lot you're going to do today. I would assume that this volatility pumps up a little bit today with that news. And so the only thing you can really do in here is do like a covered call or just outwardly sell like some puts or something. Because there's no real strategies in here that, I mean, to me, that are worthwhile. And again, I really have to see how these price out. I have a little bit of a problem with, some of these are only 2 cents wide, which is actually not bad. But some of these, like this one, is $2 wide. So I can't even really, this one's $2 wide. This one's only 2 cents, which is okay. So a lot of these are not really price discovered as of yet, which brings me to another point that it does kind of suck that these markets are not open 24/7 or at least open the damn things up at like 7 a.m. for price discovery. But anyway, is what it is. But yeah, you can't do much of anything in here but like do a covered call. And if you're going to do the covered call, likely given today, these 12 and a halves will probably be juiced up a little bit. You'd have to do that. Again, there's not a lot. Or you just outwardly just come here and sell. Just sell the 12 and a half puts. I would have to believe that the bid on those was going to be better than 290, but again, I don't know. So anyway, that's what's going on with that one. And if you look at it on the charts, it's just gotten a snot beat out of it. I mean, so if you're looking for a pig, I don't know. I mean, to me, you can't beat getting long in here because again, like. Your downside is it goes to zero, right? It's $10. It's a large company, so it's not like, not to say that they don't have their problems. They definitely have their problems. But if you are looking for a slob, I already own it. I unfortunately own it much higher than $10. And what I've been doing is I've been kind of wheeling it. And wheeling it is that I was selling puts at one time. Those puts got assigned. Then I wound up owning the stock. And then since then, I've been selling calls against it. And that's, kind of how I've been dealing with. I don't have a ton of, I have 100 shares. So, I don't have a ton of stock. But unfortunately, I own it at like $30 a share. Now, since I've been wheeling, my cost basis is only, I want to say my cost basis is like 13 or 14 now, just from wheeling, which is I've been selling calls against my shares. So I've been reducing basis in here consistently, and I may pick some up today. I kind of I want to see how these 12 and a halves price out in April. But yeah, that's how I'm going to play it. I'm going to sell those 12 and a halves. But I have to do some price discovery on that and see like where the hell they're going to open. There's good open interest here as well. So there's one for you. Sell the 12 and a half puts. And you can see selling the 12 and a half puts, and this delta is probably going to be a little less today because the price is up about $1. But this delta will probably be in the high 60s. So you're getting like 60 shares in this. So it's like buying, I mean, you could buy 100 shares. Again, you could just do the covered call or just buy the stock. Just buy the damn stock, right? I just hate to outwardly buy stock on a day where it's already up $1. And so that's why I wouldn't really want to buy anything. But anyway, there you have it. Walgreen and Boots. Where they got the boots from, I don't know. The Alliance, the Walgreen Boots, I have no idea. I've never really done any research on how Walgreens got the name Walgreens Boots Alliance. But I'm sure it's from a series of takeovers. And, you know, that's kind of the one drawback to following me is that a lot of times with companies overall, I get like a list of stocks that I trade on a regular basis or that I own, and I just don't, and I honestly don't really care what they do because I'm not really trading the stocks for fundamentals. I'm just trading the stocks to make money. And yeah, so right. So anyway, there's that. And then also, so anyway, there's the Walgreens Boots Alliance, right? I think Delta Airlines also has, and I don't see it on the list here because it was on the high IV rank stocks here. It has to still be here. There's no way that it actually went away because it was still up here even the last time I looked. I don't see it on here. Where did it go? Because I have a little Delta Airlines. Let's go to earnings. Earnings. Yeah, I'm almost positive they had earnings today. Yes. Yeah, Delta Airlines. And, wow, they really collapsed volatility in here. I didn't realize that. I actually sold some. You can see here, I'm in some March stuff, and they really collapsed volatility in there and did not realize that. I know when I was selling stuff in here, I was doing both puts and calls. I was kind of selling outside of the range, doing both sides and kind of selling on that volatility, and I didn't realize that when I was doing it, I know it was in the 70s or 80s. It would be nice if this worked because then I could actually show you that it did. But it has indeed collapsed because I know for a fact it was in the 70s or 80s when I was selling stuff. And so that's interesting. So, yeah, they did have earnings this morning. I don't know if they announced yet. Let me just take a look. Oh, Home Depot, Lowe's, blah, blah, blah. Constellation Brands, UBS, blah, 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 blah. I don't see anything on. But they were supposed to announce earnings. I assume they did. There you go. Delta Airlines rises. So it's up about $3, $4. Looks like it's up about $4. And Delta Airlines up, whatever, pre-market, adjusted profit, blah, blah, blah. Overall also grew at a faster pace than expected. blah blah blah. Shares of peers. Okay, so they had earnings and they were good. Stock is up, but it didn't blow out, and that should actually cause volatility to collapse in here even further, which is also, I think, good. One good for us. And there's my delta position, and you can see it has come in pretty nicely. And even with this pop in the price, it's going to put, I mean, you can't ask for a better spot after earnings. You're going to get a volatility collapse, and it's literally like smack in the middle here. So perfect. So I'll probably be able to close that. So does it put Delta on the map for a trade post earnings? Damn no. So let's take a look at the charts. Airlines overall have done well. They have done well this year. I mean, here's here's the beginning of 24. And so you can see that the airlines have had a pretty terrific year. I mean, Delta Airlines literally double in price over this year. So, and I know UAL is kind of the same thing. I don't know about some of the smaller carriers like JetBlue. I do not think they have had as good a year. But yeah, Delta, a really, really a good year. And I don't know. I mean, does it continue? Yeah, I don't know. I just don't see it. I would have to, look, the trader in me is going to say, I mean, the post earnings trade in here for me is going to be to get short. Pre-market high 66.15, almost breaking out here. I don't know. Like, I would really have to think that, and yeah, I would really have to think that I would have to lean into some of these airlines after this short. Again, like just looking at this on where this has gone, and you can't tell me the future's bright with airlines either. I hear nothing but people bitch and moan about everything to do with airplanes and airports and airlines and everything else. And so I think at some point that is going to kind of come back. But we will see. Pre-market high 66.01. So I don't know. I would have to lean short, but we're going to see. If it blows this out, I'm actually going to mark this up here. This looks like this is around 67. What is the high here? Let me just take a look. This right here, this high right there is 67, about 67.50. So I'm actually going to set an alert for 67.50. If we don't break that, if we break that today, I would have to say I'm going to have to get short. And the way I would do that, and I'm going to have to look at volatility, I'm probably just going to do a put spread. Okay, and so that alert is set, and we'll see. But again, the way I would play that is, we're going to get the volatility collapse on this, and I'm going to blow out of I will probably do a put spread because I think you're going to see this collapse after earnings because that is always what happens. And the only thing you can really do here is I'd probably do. I would probably do like this 65. I would probably do this 65 in March. And it would be a simple one, like a 65-60 call put spread. Just get a little negative delta in here and see if you get a little bit of downside momentum in this. Again, small little trade, $200. It's going to be a little bit. It may be a little cheaper. Maybe. A little cheaper. But for the most part, it's about a 50-50 shot. And you're not using a lot of money. So that's what I would do post earnings in Delta Airlines. And so as far as like headlines and what I'm looking at, that is pretty much it as far as like company headlines. There is a slew of garbage like spewing around in the crypto space, which I don't even want to get into because most of it's just all hearsay. Yeah, and so that's pretty much, I think, going to do it. Looking at a lot of these other stocks, you got MSTR chopping around. I believe AMD still in play for you if you want to do anything to the long side here. I mean, there seems to be a pretty decent base in here, although it is kind of down a bit pre-market. It does look like it might even break this support. I still like it here. Micron, again, that one's stuck. You know, this is actually a stock where if the volatility was higher in here, you could do stuff in there, but you really can't. The one that I think is on deck for earnings the soonest, and that actually has some juice in it, is Googs. And I don't really want to get into that one today because, I don't know what really is going to go on. Because today's going to be a weird day. Let's face it. Oh, wow, this is great. That's awesome. It's going to be a weird day because you had yesterday off. It's the end of the week. You got this report coming out at 8:30. And then next week, midweek, you could see earnings actually start, and it starts usually with the banks. And the big ones, it looks like, coming on deck here first is the likes of like JP Morgan, Wells Fargo, I see Kinder Morgan, Charlie Schwab, which the worst thing that ever happened to TD Ameritrade, Thinkorswim, was Schwab buying them. I can't stand that place now. I hate it. Charles Schwab is the worst. They are garbage. TD Ameritrade was such a great, easy company to deal with. Charles Schwab sucks. They are the epitome of just a corporate slob. Anyway, Morgan Stanley, Bank of America, UBS. So as you can see, a lot of banks next week. And we'll probably be focusing on those for earnings. And just looking at the IVs in here, I don't really see many that are I would consider like playable, like Morgan Stanley. But yeah, that stock in itself is a piece of garbage to trade. Wells Fargo, yeah, we might actually be able to do something in Wells Fargo. IV rank is 69. That's pretty darn good. JP Morgan as well, even though it's only 48, that's pretty high for JP Morgan. And so those will probably be ones that we're focusing in on early next week as earnings start to roll in. And we start setting up for that season. And so it's 8 o'clock. Not much going on. Futures is chopping and slopping still. We're up 4 handles now, so there is definitely some skittishness before there's big numbers. And as far as trades and setups and all that, again, there's to me, there's really not a lot going on, in my world anyway, and my world is not very expansive. Look, this is pretty much, these are the stocks that it says big tech. That's pretty much where 60% of my trades come from, is any one of these companies. It's just, what I do. These are the ones that hit the tape and have the most headlines and have the most movement, in my opinion, anyway. And then also, there are a few others. Like I mentioned, I'm in some airlines right now. I think overall, if I actually switch gears and just put up the ETFs here, let's load the ETFs and take a look. And the reason I look at the ETFs is that they're sector-based, right? So if you look at the likes of like the Jets, not the Jets, not the New York football Jets, but the Jets ETF is the airlines, and that you can see, since the beginning of last year, this thing's had a massive run from its lows back in August. So there's that. Again, that one looks like, if I'm going to trade it the way I trade, I like that short. Scarily, this has not done jack shit ever. I mean, it just has not done anything. This MJ, which is actually the weed and the cannabis ETF, hasn't done nothing at all. It's been, it's a pig. But I has me, unfortunately, just the way I'm wired, and looking through this, I think it may be time to maybe put a little bit of capital to use in here. Not a lot, but to nibble a little bit down here. Because you can see this thing has just absolutely gotten annihilated. And it seems to never have any legs at all. The XLY, which is the consumer discretionary, basically XLY is Amazon Tesla. That's, I think, almost 30% of the portfolio is Amazon Tesla. So that is kind of calling it consumer discretionary, it's the Tesla Amazon ETF. No real play in here, though, because volatility. And then natural gas seems to be on a tear. Now, I wish it didn't have the UNG. Natural gas seems to be on a tear. So there may be some opportunity here in natural gas if we get to some extremes here at like maybe 21. So we'll go ahead and mark in there. And, this will give you a good idea of where maybe you should start looking for some opportunity. You got the XLP, which has been down of late, had a pretty decent year, obviously, but does look like, again, to me, it's coming into a pretty good area of support. If it does, in fact, get down there, I would be a buyer or start to kind of do things and nibble on these stocks down around 75. Now, I wouldn't do anything in the ETF itself. The reason I follow the ETF is because it kind of gives you an idea of what that sector is doing. And then I'll go and look at what stocks are in it. And usually you'll find there's usually 2 or 3 big names that you can trade that are in these. Energy, XLE. This has been all over the place, but as you notice too, crude oil has been kind of on a bit of a tear, and so is natural gas. Giving this a lift as well. But overall, I don't know. Is there anything there? No idea. The insurance ETF. Now, you're watching all the wildfires and everything else going on out there. I think this is a short. Only because, you're going to get the claims for this. I mean, people are starting to come after the insurance companies now for what happened in Asheville and all these other disasters where they haven't been doing shit for people. And they're making boatloads of money, and I think sooner or later the rubber's going to meet the road there, and these are going to fall out of flavor. You could see they've actually started to, and I think, if you look at this pattern overall, I think you can start nibbling short here on some of these insurance stocks, and that's the IAK, which is the insurance ETF. All right, and so there's just a few to maybe look at. I'm not going to go over all of them. That's pretty much all I had today. We'll wait for this number. Trade soft today. Don't really be too involved. I think it's going to be I think what's going to happen is we're going to get our gyrations from this report, and then, it's going to be back business as usual, and it's just going to be right back to where we were before it happened. So anyway, that is it. I will be back on Monday.